Good day, folks. Thank you for joining us today. My name is Marc-Andre Pigeon. I'm the director for the Canadian Centre for the Study Co-operatives, also a professor in the Johnson Shoyama Graduate School of Public Policy. And today I'm very pleased to welcome Andy Poprawa, a former regulator at a major regulatory agency in Canada. And joining me as well is Mamun Abudllah, a professor in the Edwards Business School, who's going to be helping with some of the questions and discussion. So with that, I'm going to jump right in and ask Andy to just give us a little more detail about your career background, Andy, and how you got into the business of regulating credit unions and a bit about that experience as well.
Thanks, Andre. It's a pleasure to be with everybody today. Thank you for the invitation. So first of all, I'm a lifelong credit union member, which is an important element of why I feel so strongly about credit unions. My career actually started as a CEO of a mid-sized credit union in Ontario, an ethnic community bond, which was kind of interesting at the time and actually still around, as well as a whole bunch of other ones similar to that. Then I moved to actually what became OSFI. When I moved on from that job as CEO of the credit union, I moved on to OSFI to become a regulator. And in that role, I was responsible not only for the credit union centrals in Canada, but also the banks and trust companies. I had a lot of experience with overseeing deposit-taking institutions generally. And then when the opportunity came, I came back to the province of Ontario to take on the responsibility of Director of Credit Unions and Cooperatives, which was a fascinating job. And then from there, I moved on to the Deposit Insurance Corporation, which became the regulator and deposit insurer for credit unions in Ontario. And I stayed there for 23 years, so it was a long gig. In addition to all those sort of on the ground regulatory experiences, I was very fortunate to be involved with something called what's now called CUPSA, the Credit Union Prudential Supervisors Association in Canada, as well as ICERN, which is the International Credit Union Regulators Network, where I was the co-founder and chair of that. So that was a lot of fun doing that with my colleagues around the world and in Canada.
Great, thank you, Andy. So you have a tremendous wealth of experience to bring to this conversation. And I think the burning question for us, and we're calling this kind of conversation series, Cooperatives in Times of Crisis. And the burning question for us right now is, what's going on behind the scenes with policymakers vis-a-vis credit unions? We don't hear a lot. You go onto the websites, you don't see a lot, but we know things must be happening. Conversations must be happening at all levels. And maybe you can just describe what you think is going on. I know you're not necessarily involved in those conversations, but just based on your extensive experience, what might you think is happening behind the scenes, and how are regulators in particular responding to this?
Depending how you look at it, fortunately or unfortunately, we had, a previous experience 10 years ago with a financial crisis. Now, this is a completely different environment, but a lot of the things that were set up during that period of time and what we learned from that experience in 2008, 2009, I'm sure are becoming extremely useful to the folks around the country today, both at the federal and provincial levels. So each and every regulator, regulatory agency, deposit insurer, deposit guarantee corporation, every one of them, no doubt, is monitoring all of their credit unions very carefully, keeping in touch with each one of them to make sure that they know what's going on. One of my clients is a regulatory agency in a province, and in our conversations over the last few weeks, they have been talking to each and every credit union CEO, and in some cases the board members as well, board chairs. So there's a lot of communications going on. Mostly to making sure that everybody understands what's happening on the ground. There's no better way to get that than by talking to the people on the front lines. And on top of that, as I just mentioned, all the provincial regulatory agencies responsible for credit unions are part of CUPSA. CUPSA is no doubt meeting, as they have in the past, weekly during a time like this to coordinate, share information, find out what's going on in their own jurisdictions and what they can share with everybody else. And sharing of information and sharing of experiences is very valuable. And I think most of credit union regulators to date have shared some level of guidance with their credit unions, whether it be publicly through their websites or some other mechanism, or privately in the conversations or in communications with individual institutions. So I think there's a lot going on. You may not see it at the front end, at the public end, but I think there's a lot going on right now.
Before I turn it to Mamun, because Mamun was going to be asking the next question, I have to ask one quick follow-up question, Andy. You mentioned the previous crisis, which was, of course, very different, but also quite significant and perhaps a little bit unprecedented in recent memory anyway. What were those lessons that you took, that people took from that crisis and that are probably being applied today? Is it just the communication, or is there more to it, do you think, that kind of came out of that last event?
Well, I think the lessons learned for me were, there's never enough capital, there's never enough liquidity, there's never enough good management. I mean, we're very blessed in Canada. I can tell you, compared to other jurisdictions around the world, we have excellent governance at Credians. We have really, really top-notch management, generally speaking. Sure, there's always going to be some gaps here and there, but I mean, overall, we have a very solid foundation for the crediting system in the country. And unfortunately, that's not the case everywhere. So I think we learned from that experience, and we built on things that were already happening in 2008, 2009. Over the last, if you look at the regulatory regimes, they've been enhanced. More resources have been allocated to those agencies, and quite frankly, better training of the folks in those agencies. So a lot of resources have been expended to make sure that we're solid. And again, not only at the provincial level, but at the federal level as well. So Canada is, I think, in very good shape to withstand the kinds of stresses and pressures that we're going to face over the next little while.
Perfect. I'll hand it over to Mamun now to ask the next question. Mamun, it's over to you.
Thanks, Andy. So my first question to you is, what kind of measures and regulatory forbearance do you think regulators are looking at right now?
Well, regulation is difficult at the best of times, and during a period of stress, it's even more so. So the first thing that all the supervisory authorities are looking at is to make sure that they keep top of mind their job, and their job is to protect the public and to maintain stability in the system, and that means to maintaining confidence. So I think, primary role of the supervisory regulatory agencies is to make sure those things are happening at all times. All supervisors in this kind of environment have to sort of go back to I guess the Churchill days: keep calm and carry on. You have to be able to make sure that you're thoughtful about what you're doing, but forward thinking as well. So virtually in all the provincial jurisdictions, regulators are providing some level of support, either by direction and guidance, by forbearance in some cases, and in other cases, actual financial relief of some sort, which I'll give you some examples in a minute. But most of them are actually following the lead of OSFI, the federal regulator, which came out right away with a package. And the federal jurisdiction has a bit of a advantage, I'll call it, because they have the information way before perhaps the provincial jurisdictions get that information. They see the big picture through their relationship with the Bank of Canada, the Department of Finance, and CDIC, for example, for banks. So all those elements come into fore and inform the federal regulator about what is going on around them. So here are some suggestions about what they're looking at. Now, the federal regulator and all the provincial regulators are going to be typically worried about three things: 1, capital; 2, liquidity; and 3, operational, what I call operational resilience. So just dealing with those individually. So on the federal side, the Bank of Canada and OSFI and the Minister of Finance had a press conference really early on. The first thing that OSFI did was to provide capital relief for the banks through the capital buffer, and they lowered that capital buffer by 1.25%, which generated, if I recall correctly, the number about $300 billion of additional credit availability immediately, within a few days. So that was really an important element of that. They also deferred the implementation of Basel III to 2023, which provides a longer runway for banks to look at the necessity to change their systems and add additional capital. Another thing that was really important for them to do immediately is to recognize that loan deferrals are going to be a fact of life for the next few months, and so they're allowing banks not to count any non-performing loans, any loan deferrals rather, as non-performing loans for that period of time. And finally, they've added some guidance with respect to the application of IFRS 9, which is the standard which provides for how you generate loan allowances. So compare that to credit unions. Most jurisdictions have allowed, again, the same thing, allowed credit unions to operate with capital levels lower than their internal targets. Most jurisdictions have required credit unions to have internal targets that they must look at, so ICAP and things like that for the larger credit unions in particular. And so they're allowing those credit unions to maybe dip into that capital pool over the next little while. Similar to what OSFI is allowing, they're allowing loan deferrals for up to 6 months and not having those counted as non-performing loans. And finally, they're also looking at some flexibility with respect to the application of IFRS 9. So those are the kinds of mechanisms that they have in play on the capital side. With respect to liquidity, liquidity is from a banking perspective and from a crediting perspective, probably almost, if not more important than capital. You can run a credit union for a long time without capital, but you can't run it for a day without liquidity. So it's really important to make sure that the liquidity standards are respected. On the bank side, OSFI is doing all kinds of things there, but most importantly, reducing the capital outflow calculations on what they call their liquidity coverage ratio, LCR calculation. Some of the credit union regulators are asking credit unions themselves to identify any potential liquidity risks associated with this pandemic situation, and providing information to the regulator to make sure that they are funding it properly, either through central or some other mechanism for additional capital and liquidity rather. And finally, in some cases, they're actually allowing some guidance and some forbearance on the liquidity calculation itself. And there are a number of other considerations with respect to both on the banking side and the credit side. So, for example, consultations. OSFI's got a number of consultations going on with the banking system, implementation of Basel III, consultations on small banks initiatives and things like that. They've all been deferred. And similarly on the credit side, all the regulatory agencies are deferring all the non-essential consultations and other issues that are going on. And I'll give you some examples. In Ontario, the Financial Services Regulatory Authority is allowing creditors to defer payment of their regulatory fees and deposit insurance premiums for a number of months. In British Columbia, the Financial Services Commission there is allowing Central One to operate with a higher leverage ratio so it can provide more liquidity and capital necessary to credit unions. In Quebec, they've decided, as OSFI has, to defer the implementation of Basel III. Interesting enough, in the United States, the NCUA actually offers financial assistance to individual credit unions of up to $7,500 if they serve low-income people. So there's a lot of these things that are going on around us in that, but I think the general theme has been, let's help support credit unions do the important work they're doing by providing some flexibility and some forbearance over the next little while. And that's going to, I think a lot of it's going to depend on what happens over the next few months. As you know, how long is this going to carry on for, and what does it mean for the individual credit unions and their members?
Okay. I guess my next question is, so do you see any advantage or any disadvantage for credit unions, especially from the capital perspective? Is there any opportunity for credit union in this time, you think?
Well, you know, credit unions have always been there for their members, and you know, whether large or small, rural or urban or ethnic or whatever the base for the crediting has been, it's always been there. For example, in Ontario, in my experience, when there's been a labor disruption, for example, if a credit union was affiliated with a union situation, the credit union would step up and provide loan deferrals or some time, for restructuring to their members to allow them to work through their labor disruptions, things like that. So this is the essential DNA of a credit union, is to be there for the members when they need support and help. And I think that this opportunity presents itself every now and then, and this is another great opportunity for credit unions, in my opinion, to show why they exist and what they're there for. I also think that this will bring members closer to the credit union, even though it may be virtual in terms of a relationship now. But again, credit unions have invested a whole whack of resources and time and money in online and digital platforms. This is the time when those investments come to help those individuals. A final thought I would have on this particular question is really all about democratic control and governance. They're going to have to, a lot of credit unions are going to have their annual general meetings either deferred or probably more likely have them broadcast. So typically in a credit union environment, in my experience, you might have, 5–10% of the members coming to an annual meeting. This provides an opportunity for a whole lot more than that to attend the credit union's annual meeting and participate virtually through a webcast or some other mechanism. So I think the opportunity there is to reinforce the credit union brand, to continue to service the members and provide them with the support they need during these troubled times. And then, of course, is to build communities. And I think if there's one positive thing that comes out of this situation, I think you're going to see much stronger communities across the country. All of us working together for a common goal. And that is exactly what credit unions are all about. You mentioned capital, and one of the benefits of credit unions, of course, on the capital side, is that a lot of their capital is retained earnings, built up over 70, 80, 100 years of operation now. And so they don't have to go running to the market to get more capital. If they need it, they can get it from their members, but a lot of them are very well capitalized from a retained earnings basis. So the cost of capital, quite frankly, is not as a barrier, for example, as it might be for their financial institutions. So that's a big plus as well. And equally, I think as well, I think liquidity is not a problem because, again, credit union members are more likely to stick with their credit unions than they are to take their money and put it in the marketplace, especially with the markets the way they are in the capital markets. So I think a big benefit there as well. So I think overall, a great opportunity. And again, it's up to the credit unions individually and collectively to take advantage of that opportunity.
Thank you.
That's great, Andy. Thank you. So you've already kind of addressed a little bit of this question. You've talked about the important kind of lead that OSFI is taking, and provincial regulators looking to OSFI to have better, more quick information about the evolving situation. But if you were back in your old seat at DICO, what kind of conversations would you be having with federal counterparts in terms of ensuring that the federal system is there to support the provincial system? Two different worlds, but they're closely connected, of course.
Well, they are closely connected, and I think that's the big benefit. The federal jurisdiction and the federal folks at the Bank of Canada, at OSFI, and others have the same interests in mind as all the provincial folks as well. We need a strong financial system to help carry us through this particular situation. So I think we all share a common goal, and that is to ensure that all financial institutions of all types in the country are solid, have got a very good foundation, are seen to be safe and sound places for the funds, savings of individual Canadians. So I think that's the starting point. There's a lot of integration between the various components of the financial services industry and system. For example, the clearing and other operations. They're really important to make sure that they're all functioning well. So there's that connection as well. And finally, I think from my perspective, the government of Canada and all the provinces want to make sure there's a level playing field between all the various components of the system. So you're seeing, I think, a trend over the last number of years where the provincial regulatory bodies and the policymakers and the federal policymakers and regulatory bodies are working together to create a platform that's that the consumer would see as consistent across the country. And so for all those reasons, I think that those are the kind of conversations that are going on right now. Obviously, if there was a deterioration in a particular province or area of the country, it's going to impact both credit unions and federally regulated financial institutions. So I think they want to know about that as well. So I think there's a lot of coordination going on, as there should be, and I think it's for the benefit of all Canadians.
Andy, I had another question, but I think you kind of answered it. I do have a little bit of a question that I just came to mind as you were speaking, and that is about some of the recent trends. You talked about the regulatory trend of kind of coming more harmonized across provincial and federal jurisdictions. But in the credit union system itself, there's been a couple of trends of amalgamation, consolidation. There's also been a slow but perhaps brewing trend of going federal. Do you think this crisis does anything to accelerate, stall, or just status quo these two trends, if I can use that term?
Well, that's an interesting question and point. I do think that there's going to be an impact on the whole issue of mergers and amalgamations by virtue of this pandemic situation. I'm not sure it's going to actually advance or accelerate that trend significantly, but I'm sure it will have an impact on a number of credit unions that have been thinking about it and deciding either to go down that road or not. So that's going to be interesting to watch. From my perspective, some of the credit unions that have not had the benefit of the resources that they need for technology, for example, which is a big issue for smaller and mid-sized credit unions, the investment required for smaller credit unions in terms of new technologies is significant. And that may lead some credit unions to the view that being part of a larger entity would be a benefit to the membership. So I think that's going to be to somewhat maybe resurface that issue of should we merge or not. Some of my clients that are credit unions have asked me this question, and we've had consultations on it and discussions on it. For the vast majority of mid-sized credit unions, to date, there hasn't been a huge benefit to merger because for various reasons. But I think this, if this hangs on for a long time and there's some financial implications of it, it might change that dynamic in that conversation. On the question of moving to the federal regime, it's an interesting question. I don't know enough about the experience to date of the two institutions that have decided to go down that road, which would be Coast Capital and Uni Financial. But I imagine that this might again create an opportunity for some of those credit unions that are thinking about going federal to see what the difference between the federal regime in terms of regulatory requirements and all the other aspects of it, the cost of making the change as well. The primary reason why I would imagine that most credit unions that have thought about doing this and decided either to go or not to go is really about what benefits the membership. In some cases, some credit unions have decided to just form a bank, a subsidiary bank, to take the member experience across the country outside their normal jurisdictions. But in some cases, as we know from Coast Capital's experience and Uni Financial's, they've decided to go that route for other reasons as well. So it'll be interesting to watch those trends. I don't see an immediate impact, but it might be something down the road that might factor into their decision to make those decisions.
Great. I have one last question, but I'll ask Mamun if you have a question for to close up on your end, Mamun.
No, I think I'm good for now.
Thanks. So I can't help but, again, I could probably keep you here all day, but I won't do that, I promise.
That's okay. I'm not going anywhere.
That's true. That's true. But I stand the risk of a child running into my room at any second, so I'm always very conscious of that. Another trend, maybe that trends is too strong a word again, but the system has been, maybe less system-like in the last few years. There's been some challenges, some successes too, but some challenges around working collectively. And as you said earlier, Andy, one of the consequences of this crisis is that it seems that there's a chance it'll bring people closer together. Do you think that might happen with the credit union system, that it might kind of start thinking, well, maybe we should be a little more cohesive as a whole, rather than kind of going our own way? Or what are your thoughts on that? I know this is a bit out of the blue, but I can't help it.
No, that's okay. Well, the credit union movement, generally speaking, its greatest strength is its collaboration with its other partners in the system. And its greatest weakness is its collaboration with the other partners in the system, right? So we all know that. And I'm sure anyone watching this will smile and giggle at that as well, because it's a challenge to get everybody on the same page. But there are times when collaboration, cooperation, and doing things together make a lot of sense. And nothing. There's no perfect answers. There's no magic bullets to these things. The idea is to collaborate when you can, and to respect each other's differences when you can't collaborate. Right. And I think that's the sort of the theme that I've been observing over the last number of years. And I think that's going to work better than trying to force everybody to say, we're going to do this together. Let's everybody sign on to it. That's not the credit union, Canadian credit union way. It may be in some jurisdictions a closer knit community than others. But the reality of it is we have such a large divergence of size and complexity and communities of credit unions that it's really difficult to make that happen that way. Will it demonstrate that there's strength in numbers and strength in cooperation? I think so, depending on how successful it is down the road. So, I think there is some merit in that, and your point, I think, is going to be validated, I think, by what happens over the next little while. But generally speaking, I think it's going to be the way it has been for the last little while. Let's work together when we can, and respect each other when we can.
Perfect. So maybe I will ask you one last question, Andy. If you have anything you'd like to add to this conversation, just a thought that may have come across your mind as we were talking. Yeah.
Well, I think it's fair to say that it's been an interesting experience. I think this sort of scenario that probably not too many of us have really thought through carefully is going to change society a little bit, maybe a lot. And I think it's going to be interesting to see how the credit unions and cooperatives too. Let's not forget that I know we're talking about credit unions here today, but cooperatives have got a long history in Canada of pulling communities together and being there when others can't be there or won't be there. And I think this is going to help people, especially younger people, understand the value of community, however you define it. So I think back to the earlier point that was discussed around opportunities. This is another great opportunity for the cooperative sector, credit unions and credit unions in particular, to refresh their brand, to refresh and re-educate individuals and people, especially young people, about what that means and what the benefits are. So, never let a good crisis go to waste. That's what Churchill said. So this is an opportunity, I think, for the whole system, cooperative system in general, to move forward and refresh. So, God bless them all. I think they got a great chance here to do something good.
That's a great note to end on. Thank you so much, Andy. Really appreciate your time today, and we'll stay in touch.